JJ the CPA here. Hope you're doing well. Quick follow-up to my seminar. I'm putting it out there for everybody to see, but we were addressing during my ERTC seminar, how do you report the tax credits that were received for the employee retention tax credit and then the sick and family paid leave tax credits. And we did have glimpses or information from the IRS out of FAQs for both. I had presented that. And we still have a question on, well, what year do we need to report it on? So I have a video talking about that I'll put in the body of this video that's more talking about how you go about figuring out what year you want to record it in. So what I'm getting ready to present here is what I had presented in the seminar, but the reason for the video is that the 1120S instructions came out. Now, it came out after I had done the seminar, and thanks to CK the CPA who sent this. I saw that email this morning, and thanks for sending that. You sent it last week, but with all the emails that I've got, just saw it this morning. So, all right, well, let's take a look here real quick. Should be brief, but in the instructions, as you can see, came out on the 3rd. I got the email, and I'm pretty sure this was in draft form on the 3rd, but doesn't matter. Came out after the seminar, and so I'll put a link for those that are taking the seminar. I'll put a link on that web page with all the resources. If you're interested in taking the seminar, watch till the end. I'll show you what's included. You get immediate access to my 2.5-hour seminar with a whole host of resources. So if we go to page 17, this is the line item that the IRS has put in the instructions on how to address this. So on line 12 of the Form 1120S, there is this highlighted section here. So I have highlighted it word for word, which you'll be able to go and take a look for yourself. You can Google this and also find it if you're not a part of the seminar. But what I did is I just copied and pasted that word for word in Word because it's just a little easier to read. So line 12, taxes and licenses, enter taxes and licenses paid or incurred in the trade or business activities of the corporation unless they're reflected elsewhere on the return. Federal import duties, federal excise, stamp taxes are deductible only if paid or incurred and carried on the trade or business of the corp. Okay, those two line items don't really have anything to do with this aspect of it. But here's what it says. Do not reduce your deduction for Social Security and Medicare taxes by the following amounts claimed on the corporation's employment tax returns. So credits that were claimed on employment tax returns. This is addressing then how do you report it on Form 1120S. Now, what I already addressed in the seminar was related to the ERTC. So this is also going to tell us about the family paid and sick leave. So the reason I have this in yellow and this in yellow is that you got to read this stuff carefully. But it says the non-refundable and refundable portions of the new CARES Act employee retention credit. Okay, now I'm going to skip down here. Reduces your deduction for wages on line 7 and 8. Okay. And then on the second one, okay, which I've tied here, it says the non-refundable and refundable portions of the new, and that's the Family First Coronavirus Response Act credits for qualified sick and family wages. Then it says must be reported as income on line 5. That's kind of weird. First of all, that they're treated differently. Oh, well. The thing to note here is that it is in other income. That's line 5. But in my opinion, this would not be included in gross income or gross receipts when determining your ERTC gross receipts reduction. It would not be included in determining your PPP gross receipts reduction. Would not be included when determining your EIDL Grant gross receipts reduction. Opinion. Those three things, opinion. I can't find anything on point related to this, but it's not gross receipts of your business. Gross receipts, if you look at the SBA and the IRS, and when they're defining gross receipts, they're defining gross receipts as what you report on the tax return for your business? Well, there's a line item right on the tax return that says gross receipts. So why don't we just go ahead and bring up a Form 1120S and go right here. So Form 1120S, will go ahead and enlarge this, but it says gross receipts. Boom. Okay. Line 5 is other income. So for those of you that want to include it in gross receipts, then just do it. I don't believe that it has anything to do with the business. It's not business income, meaning it's not collected from a customer. So while I'm saying it's an opinion, I don't see how I could be wrong that you would not include line 5 of other income for a tax credit received as part of your gross receipts. Now, with this, I just wanted to mention to you that, yes, we were looking at the instructions for 1120S. So I went to see, well, hey, is it addressed the same on 1120? I'm sure that it will be exactly the same on 1120. But when we hit instructions for 1120, what they've indicated is they've not been released. I believe it would be reflected exactly the same on the partnership return, but we can see that the instructions for the partnership return have not been released. Today is the 10th of February. It's 1 p.m. Central Standard Time. You know, this stuff is updating so quickly, but they will be releasing those. I'm just telling you, as of the date and time of this video, we don't have it, but you bet your bottom dollar this is going to be reflected the same way for those. And then if we were to look at a Schedule C for instructions for 2020, let's see, get down here. And if you were to go down to the, this is dangerous territory, because guess what? I haven't looked at these instructions before this video, but it dawned on me that I might just go ahead and pull it up for those that are filing the Schedule C and do have employees and did receive the credits for the employees that they had, because they would qualify for these tax credits when you're looking at how that gets reported. So while I'm fumbling here looking, you can say, well, geez, why weren't you prepared? Well, guess what? I'm doing the best I can on this stuff. All right, well, dang it. Here, we're going to find it. But let me just tell you this real quick for those Schedule C filers. If you are the one that is claiming the credit on you, Schedule C, Schedule F filer, self-employed, you don't qualify for the employee retention tax credit. It's plain as day. The FAQs still haven't been updated. As you can see here, I'll refresh the page. When we look at, let's see, employers, down here it says self-employed individuals eligible. They're not eligible. Self-employed are not eligible. However, a self-employed who employs individuals in its trade or business and meets the requirement, they then can take the employee retention tax credit. So self-employed not on themselves, but the self-employed on their employees. And the thing to note here is that for those that are self-employed and they were with the coronavirus, or they were caring for, and all those things that fall under the sick and family paid leave, you do qualify. I do have information on the webpage on my ERTC seminar. Now, the seminar wasn't about family paid and sick leave, but for the self-employed, that person who's self-employed, they do qualify for the family paid leave credits and the sick leave credits. So you need to take a look at that. But that on you is filed on Form 7202, which I have a link to. On that webpage for those that are self-employed. So let's just break this down. The self-employed, you have two things going on for you. You have employees if you do W-2 employees. All these credits, ERTC, the sick leave, the family paid leave, you qualify if your circumstances and your employees qualify, then you get those credits and you would file those on your 941, a Form 7200 if it applies, and you would report the credits the way that we're getting ready to find on the instructions. For you as the self-employed, on you personally, you don't get ERTC. You do qualify, you can qualify for the family paid and sick leave tax credits. You claim those on Form 7202. So there's two ways that you're able to get the credits, one related to the employees and one related to yourself. So what I'm addressing here in this video for the self-employed now is if you have employees and you have these tax credits, you are then going to report them, I would assume, the exact same way. So on Schedule C, we will see that taxes is line 23. So let's go back to the instructions. Maybe I already passed it. I did. So let's go back up to line 23. And if anything, y'all are seeing that when it comes down to this, this is how you kind of figure out some of your answers. So let's see, line 23, state and local, real estate, licenses. Let's see, the match, federal unemployment, contributions, do not deduct the following, self-employment tax, improvements, taxes on your home, sales tax, state and local, and, oh, perfect. Look at this. I should have looked for the caution. It says, do not reduce your deduction right here. So I'm going to unhighlight this, but this is what we're talking about right here. Do not reduce your deduction for Social Security and Medicare taxes by the following amounts claimed on Form 944. That's a simplified annual form for small employers that file instead of a 941. It says the non-refundable and refundable portions of the new CARES Act Employee Retention Credit and the non-refundable portions of the new Family First Coronavirus Act credits. So what's clear is on 1120S and on Schedule C, it sure is going to be the same on the partnerships and the C Corps. It's telling you, you do not reduce down your taxes by the credits. So it says, instead, reduce your deduction for wages on line 26 of Schedule C as reported on line 6. Let's see. Okay, hang on a second. Hang on. Here's the thing. You can go find these instructions yourself. Sorry to fumble when I just mean fumble reading here, but it says, instead, item 1, okay, that's the employee retention tax credit, reduce down your deductions for wages on line 26. And then it's saying for item 2, it must be reported as income on line 6. Well, line 6 here is other income on your Schedule C. So really at the end of the day, the way that you're accounting for this information is, let's see, let me stop my share. So the way you're accounting for this information, it seems like across the board, you can verify it on 1120 and 1065 when those instructions come out, is that for these payroll tax credits, you do not reduce down your taxes, that line item for taxes. What you reduce down is for the employee retention credit, you reduce down wages. For the family paid leave and the sick leave act tax credits, you report that as other income. Weird. I think across the board, though, none of that gets included in your gross receipts. All right, hey, let me just show you real quick. If you've already attended the seminar, thank you so much for that. Basically what you're going to be looking at here in terms of what's included as indicated, let me go ahead and pull up the website, is basically maybe a one-stop shop. I put a lot of links in there. I've got some flow charts as well as some Excel schedules showing the calculation. I've got some examples, and I really feel like I've covered as much as I possibly can. There's a PDF of the PowerPoint to follow along in the 2.5-hour seminar, and it does include 3 hours of the Q&A that I did after, and then I've done 4 videos. Now it's getting ready to be 5, and I'm getting ready to add a 6th follow-up video that you can take a gander at. So you'll be able to see here. So I'm going to go ahead and let me see if I can share this. Doesn't look like it. All right, here we go. So basically for this seminar, you get immediate access to everything, including the video. I've got a private research video that I put out on, kind of my theory on employers that should qualify. I think more employers are going to qualify than people are thinking. And then you have the seminar, 2.5 hours plus 3 hours of Q&A. And then I've got all these links in here for you: PowerPoint, flow chart for 2020, flow chart for 2021, calculations. And then, a number of these things are links to the things that you need, but it's links to the things that you need, all related to this: recent IRS announcements, some key FAQs with a main link there. I talk about aggregation. That was my follow-up video with a number of links related to that, meaning that was done after the seminar that you would have immediate access to. And then here also I did a follow-up on how to report it for income tax purposes. And this video is a follow-up to that video, because that video was done before the instructions came out. Although I don't believe there's anything there inconsistent, just the instructions are following it up. This part here is mostly, in my opinion, addressing what year do you report the credit in, which the instructions don't clearly tell us. And then I talk about related individuals, and this one's become a little bit of a hot topic. In this video here, basically, I don't have a conclusion. I just explore it further. I go into the law and provide, I think, enough information to basically tell you that, owners and spouses, here's kind of my conclusion. For relatives, here's my conclusion. And the conclusion is you probably need to make the final conclusion. But I feel like I really deep dive into the actual law to break that down for you. And then I've got some other videos that were put in. Plus, I told you I've got these things that are not related to the ERTC, but nonetheless, I put some examples in there, and the FAQs related to the IRS. And then I put in the acts. So as you can see, a lot of information. And quite frankly, this is the sign up page, and more has been added to the actual page that you get access to immediately. So I'll put a link to that there. So, hey, thanks for checking that out all the way to here. I appreciate it. And as you can tell, especially for those that are attending the seminar, I'm just building on this web page as new information comes out. So for $97, 2.5 hours, 3 hours of FAQs, plus I think at this point, another 5 hours of additional videos. At this point, it's going to be an additional 6 videos, plus a research video, plus the links and everything I already just told you. So I don't know, pretty heck of a value probably in my mind for $97 for all of that. All right. Hey, thanks for tuning in. Love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me. All right. Oh, and yeah, sorry for the backdrop. I've been doing videos this way, and I just don't have time to keep breaking this down. So you're just seeing it straight in the studio for the home when the studio's going the other way. Have a great day.